Every day, thousands of vehicles break down, crash, get repossessed, or disappear from parking lots on the back of a tow truck. But towing companies are more than roadside rescue. For many operators, the real money isn't just in helping stranded drivers. It's in contracts, impound fees, storage charges, and high-pressure enforcement. This is how a towing company really operates. At the most basic level, towing businesses move disabled, damaged, or illegally parked vehicles from one place to another. But not all towing jobs are equal. Most towing revenue comes from 5 major streams: emergency roadside breakdowns, insurance or motor club contracts like AAA, police and municipal towing, private property enforcement towing, repossession, and specialty recovery. Let's start with the most familiar, breakdown towing. When a driver's car won't start, blows a tire, or gets stuck, they call a tow company directly through insurance or through a roadside service network. Typical light-duty tow jobs in the US often charge base hookup fee, $75 to $150. Per mile charge, $3 to $8, plus after hours or emergency surcharges. That means even a short local tow can easily hit $125 to $300, but independent calls can be inconsistent. That's why many companies chase contracts. Insurance providers, roadside clubs, municipalities, apartment complexes, shopping centres, and police departments can all supply repeat work. These contracts often mean lower margins per call, but they create volume and stability. For example, AAA or insurance dispatch may pay less than a direct customer, but it can keep trucks moving constantly. And in towing, idle trucks lose money fast. Tow trucks are expensive assets. A light-duty flatbed may cost $60,000 to $150,000. Heavy-duty wreckers can exceed $500,000. Add fuel, insurance, driver wages, licensing, maintenance, dispatch software, yard rent. This business has serious overhead. That's why maximizing each truck's utilization matters. Now here's where towing gets controversial: non-consensual towing. This includes private parking violations, apartment complexes, retail lots, HOA enforcement, police impounds. In these cases, the vehicle owner often didn't choose the tow, and that changes the pricing power. Instead of competing for a willing customer, the towing company often controls release through legal possession. This is where fees can stack: tow fee, administrative fee, gate fee, daily storage fee, after-hours release fee. A car towed on Friday night may become dramatically more expensive by Monday morning. For towing companies, impound lots can become one of the highest margin parts of the business. Storage is especially powerful because lot space keeps generating daily revenue, and if owners never reclaim vehicles. Some jurisdictions allow lien sales or auctions. That means abandoned vehicles can create secondary revenue. This model is one reason critics accuse parts of the industry of predatory behavior. Public scrutiny over excessive or opaque fees has increased in recent years, especially around non-consensual and heavy-duty tows. Of course, not all towing companies operate aggressively. Many focus on legitimate emergency response, fleet support, or specialty services. Heavy-duty towing can include semi-trucks, buses, construction vehicles, accident recoveries, winch outs. These jobs can bill hundreds or even thousands of dollars due to equipment, labor, and urgency. Then there's repossession. Repo towing is a different beast. Lenders hire recovery agents to locate and reclaim financed vehicles when borrowers default. This often requires skip tracing, license plate recognition, night operations. Legal compliance repos can be risky, but profitable. Some companies specialize entirely in this niche. Operationally, dispatch is the brain of the business. Modern towing relies on GPS fleet tracking, route optimization, police scanners, insurance integrations, driver communication systems. Winning a job often comes down to response speed. First truck on scene often gets paid. That speed creates fierce competition, especially in accident-heavy urban areas. Scaling a towing company usually means moving from owner-operator to fleet model. A single truck may provide a living. A fleet with municipal or police contracts can become a serious enterprise. The strongest operators often diversify. standard towing, roadside assistance, impound storage, auctions, heavy recovery, fleet transportation. This reduces dependence on one income stream. So how profitable is it? A well-run towing company can generate strong margins, but profits depend heavily on contract quality, truck uptime, territory, storage capacity, regulatory environment. Because one major lawsuit, damaged vehicle claim, or predatory towing scandal can also destroy a business. At its core, towing is a mix of transportation, enforcement, emergency response, and asset control. For some customers, it's a lifesaver. For others, it's an expensive nightmare. But either way, it's a business built around one simple reality: cars stop moving, and someone gets paid to move them. If you enjoyed this breakdown, comment what business we should uncover next, like, and subscribe for more deep dives into how industries really make money.